Welcome to another update today in which we're going to look at the Bitcoin price action. We're going to talk a little bit about the altcoins as well, as those are showing a ton more weakness. But before we continue, make sure to hit the like button, subscribe to this YouTube channel, check out my free trade letter which is free 3 times per week, and also check out our premium membership in which you can copy trade my portfolio, copy trade some other portfolios as well, and follow our trade IDs. In the past 2 months we have done 38R, which is 38% if you were following with 1% risk. So when we're looking at the altcoins and about the markets overall, we can see in the chart that there is literally nothing happening at this point, except for the fact that altcoins are correcting down towards their lows. Bitcoin and Ether are still quite strong, which is the result of the markets just stabilizing. Why do I mean stabilizing? Well, we have been seeing these big expansions taking place here, through which you overall get a period of sideways action before continuation starts to take place. So in this case, we just had a big expansion, price starts to consolidate, it's hovering between a few levels of importance. As we can see here, it needs to break through 23.8 in order to have continuation on the market, or otherwise we're going to sweep this low 22.7 towards 22.3 before we can have continuation taking place here overall. So what is happening in the market some more? We're going to discuss this in the charts in a little bit. We can see that the Nasdaq has been falling down, and that's due to the fact that inflation numbers are coming out and the inflation numbers are higher than expected, which means that there is an overreaction on the markets right now. But we could be agreeing that the Fed will stick to its policy for a little longer period of time. And the CPI numbers of Europe has been higher than expected, but also PPI last week was the exact same. And PMI of this week is worse than expected by a tiny bit, which means that the economy is still not showing enough strength. But today we've got jobless claims, and it's all a little bit of an overreaction always towards each way. And in this case, we can see it's an overreaction towards the downside with the markets, resulting into the markets currently facing some downwards momentum, and therefore resulting into crypto also dropping down. Hence why the entire correlation topic with China, it's just bullshit. We're still moving along with the US. China is actually moving along with the US. That's what we can see in the charts. What we also see is that the DXY has been rallying up. Why is that? Well, I just mentioned Europe CPI came in more positive than expected. As a result, the dollar index starts to rally up, and that's why I've been mentioning a few important levels, which is we have been bouncing from the area around 104.25 here, and therefore we can start seeing continuation taking place towards the resistance above these highs. So I think that the DXY has some more continuation of the rally to go for. At this point we've had a bounce of 1 point already, and most likely we're going to have another point towards this resistance point at 106.25, and that's probably going to be a massive resistance zone, and then the market starts to turn around. So then risk on assets are going to have more momentum overall, in a way that also Bitcoin can start seeing some continuation. What we can see with Bitcoin is that we're still focused on a crucial resistance point which we have to break through, and that is 23.8. At this point we are not clearly breaking through it. We have been testing it twice and we couldn't find enough strength to bounce and actually start to accelerate. I think that with this build up, either way there is volatility going to kick in within the next few days. If we are going to flip 23.8 and break through it, we most likely start to expand towards continuation of the highs. This is the same pattern we have been seeing before, and the same pattern we've also been seeing prior. So every 2 big expansions took place after a period of such a consolidation, in which this case we have been cracking towards the resistance at 22, started to rally all the way towards 23.5. Here we have been sweeping the low, which doesn't have to be, as we have been seeing that here, started to go sideways and break through the resistance at 22.5 all the way towards 25. In this case, if we have another sweep of the low, I'm definitely going to bet the long side around 22.5. But if we are grinding towards 23.8, just like we have been doing here, and start to crack through that resistance, I'm quite sure we're going to rally all the way towards 26.7 and ultimately result into some serious strength, and could be blasting all the way towards 30k or potentially even higher. Now when we're looking at the altcoins, we can see that there is some more weakness at this point. For instance, Chainlink, which is often the one that I'm using in this case, has been seeing a rally towards $8.30, in which we were going back down towards the range at $7.25. Quick bounce, and now we're just consolidating in this support range. What I preferably want to play at this point is the ultimate confirmation of taking liquidity and then turning around. So in this case, if we drop beneath $6.98 and drop towards this entire region, that is an aggressive long trigger, I would assume. But if we are reclaiming the level around 7.15, I think you can actually make a more justifiable decision to start looking for your long entries, and then we can start targeting $8.10 from here. So we have been taking the liquidity above the highs. Most likely we need to take the liquidity beneath the lows, then reverse and continue the rally. That's the update for today. Make sure to hit the like button, subscribe to this YouTube channel. I'll be back tomorrow with my altcoin portfolio. Make sure to also check out our trade letter. Have a good day. Ciao.